And a very good morning to you, and welcome to the TriggerCharts pre-market rundown for Friday, August 27th, 2021. I'm Andrew Horowitz. I am the host of this, of course. I am the co-founder of TriggerCharts, and I'm so happy that you are here using our indicators and learning about exactly what it's all about when we talk about the idea of support resistance based on volume at price, not your ordinary grandfather's support levels. These are the modern support levels, the ones that we look at from the aspect of trying to understand where there are fingerprints or footprints, depending on how you look at it, of individuals, institutions, as well as people that are trading overall these in whatever it is, whether it's a stock, whether it's an index, whether it's currency, whether it is in fact or maybe even cryptocurrency. But the fact is that we have a great algorithm, a wonderful way to look at what is exactly happening in the markets. Before we get any further, a couple of different things I want to mention to you. Of course, you can check out all the videos. We record these over on the YouTube channel for TriggerCharts, also on the TriggerCharts.com website. We have to mention, I think it's important to note, that we have the discussion here each and every Friday that is for educational purposes only. Investing, of course, involves a substantial amount of risk, and of course, you can lose money. So it's important to understand that what we're doing here is giving you information to use your best judgment when investing, and that is the important disclaimer that we have to talk about here. I also put a couple of links over in the chat. In the chat is also where you can put your particular symbols or names that you want us to look at. And I'm going to put the word here, just to kind of put it here, with some exclamation points here, is where you put those symbols. What we do on Fridays is we come together and talk about some of the macroeconomic, but also some of the backdrop issues that are really going on right now. And the theme right now, I guess for this week, I try to come up with something that is important and something that really is apropos for the week. And this week we have to say, faker or taper. We've had several Fed speakers come out and talk about taper talk. We had them come out and discuss the idea that maybe, just maybe, they're going to start rolling back some of the asset purchases. And I started to think about that a little bit and wonder whether or not today, at 10 o'clock in the morning, by the way, is Fed Chairman Jerome Powell is going to be speaking at the virtual confab of the Jackson Hole Economic Symposium that happens each and every year. And they decided last week that, hey, you know what? All bets are off. This COVID thing is too much. We're actually going to do this from the aspect of doing it virtually. So here we are with the 10 o'clock time frame approaching. And markets right now, as we see, are slightly up after a move lower yesterday on a flush down after we saw the bombing in Afghanistan. And obviously that's a dilemma that's going to take, I don't even know how long to get out of just the situation that we're in now. It took 20 years to get to where we are, 10 days or 12 days for the Afghanistan to be taken over entirely by the Taliban. And now we have to get out thousands of people that are stranded there. The whole thing's a mess. But it is going to create a little bit of geopolitical uncertainty, because now we have a lot of players that are involved in this. Aside from ourselves, of course, we have the UK that is pretty pissed off. We have China and Russia getting in the scene, so could be the start of a big problem here. Hopefully not. We'll sip of the coffee. But here we are back to the theme, and I think this is really important to pay attention to, because even if we have discussion today that, yeah, hey, you know what? We recognize that inflation is definitely moving up, and we recognize that the jobs market is healing, and we see that manufacturing is doing well, and yada, 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 Fed yada, and a lot more Fed yada. Well, if they start talking about, yeah, we're going to start tapering, what does that really mean? Well, we had a few people coming out the last couple of days saying, you know what, tapering should begin next month, and we should finish it by the first quarter or so of 2022. I'm thinking to myself, what does that mean? They're going to finish it by 2022, the first quarter, because we're talking about $120 billion of purchases. So I don't know. They may think that they're going to try to get out of this. I don't think the markets will let them get out of this. But even so, I think they're going to try for $10 to $20 billion of monthly purchases, still taking them back and rolling it back to a mere $100 billion per month. That doesn't seem like a lot. In the big scheme of things, that's still a tremendous amount of overall participation. So I think that we still have a very accommodative Fed. I don't think anybody disagrees with that. That's why we see, for example, last week when we looked at the chart to the right here and we're looking at the Qs, the NASDAQ, you saw that roll down, right? We saw this movement down, the roll down, and it did hit some support that we drew in. We drew that in last week. So there you go. You have it right there and then just pop right off of it. That support was 360.17, and we connected a line that was the end of a resistance here, which of course resistance becomes support on the downside. And we looked at this and we saw where the peak was, and we looked at where the bottom was at that point as well, where it held up several times. We drew that line across last week and it held very nicely. So here we are, up over the top at all-time highs right now. Kind of interesting that there would be that kind of situation that we would see with regard to the markets right now, considering the fact that, we have this major meeting ahead of us. But it is what we're seeing right now. Earnings. Let's talk about that really quickly. Tech still rolling in hot. We saw that Salesforce this week, symbol CRM, we'll look at that chart in a minute, came in pretty good in terms of their overall and their expectations. Company had been lagging for a little while there, but as they see that more and more people are going back to work, more seats are required. Of course, they have a variety of tricks up their sleeve with the recent purchase of Slack, and that is doing pretty well. Retail, though, seeing a slowdown. Very interesting. We're seeing A&F, Burlington, Dollar Tree all falling out of bed. We also saw, who was it? Nordstrom's down 24% in 2 sessions. Probably, I would say rightfully so. I can't see how any of these big box retailers, listen, okay, quick story. I was at a mall last night. When I tell you, if you blew not only 1, but 5 cannons through there, the whole width of the hallway, you wouldn't have hit anybody. There was nobody there. The only store that was busy, you could think about it, just take a second, hold it. What do you think? The only store that was busy, Apple. The Apple store, of course, that's what I was there for, was pretty busy. So we are seeing this slowdown as people are masking up, being concerned about going out. We see restaurants, maybe hotels, possibly airlines. All the travel and leisure could be under a little bit of attack moving forward as this Delta variant continues to surge. But one of the things we are seeing is the analysts, they're really doing a good job of continuing to raise outlook. Now, once we get beyond the levels that we're seeing currently, when we're seeing extraordinary levels of growth on earnings, I mean, there's no question, nobody can argue. You want to play the financial engineering card, okay, I'll go with you on this. But to a degree, we still see that you cannot financially engineer revenues. There's just no way to engineer revenues. So when we're seeing that the revenues are significantly higher, that is an alert mechanism. You should really pay attention to that. Whatever is going on with earnings for the moment, if we're seeing better earnings, but yet at the same time better revenues that are growing and beating analyst expectations, I think that is a real significant sign that we need to pay attention to. Now, one of the problems is that we've seen this before, and that's exactly what's happening, by the way, right now in the Economic Surprise Index. Citigroup puts out the Economic Surprise Index that looks at analyst expectations to reality. It takes their analyst numbers. It says, okay, what do you think on all these different economic levels? And they break it down, whether it's the Philly Fed, whether it's manufacturing, whether it's personal consumption, whether it is employment, and give us all those numbers, and then we're going to basically rate you. We're going to look at, well, how'd you do? And what you see oftentimes is when there's a lot of enthusiasm, they're wrong. They are under the levels, and the surprise index starts going up, and that's a good sign that, well, we were too dour, we were too negative, or not as optimistic as we should have been. What happens every single time? It's like clockwork. Once they start seeing that they are getting better numbers, they raise their numbers. And what happens? Well, there's disappointment. Right now, we're seeing significant disappointment in the Economic Surprise Index, telling us that the outlook by economists and maybe even sell-side firms that are really trying to look outward at the economic situation are, in fact, too lofty. So now what they're going to do is they're going to overshoot to the downside, just to let you know. That's the next stage. But bringing that back to where we are with regard to earnings, if we think about that analysts are raising outlooks, that's really good. No question about that. But you have to realize, what is the longer-term reality of what happens when they do that. Well, what happens is that either companies have to do a much better job to jump that hurdle, or we start getting earnings misses. So I would say that, if we do see a little bit of a lighter move, less stimulus, maybe, and people withdrawing a bit, you could be in line for some disappointments moving forward. Of course, the big issue right now, the global unrest. There's three major issues. Some of them are, warlike, like the Afghanistan debacle that's going on. Nothing good could be said about that from a political, from a human interest standpoint, from any standpoint at all. Just an absolute horror show. Stupidity at its highest level on all levels. And unfortunately, we are not going to get out of that too quickly. And you would think, just a side note here, you would think that the Taliban would say, hey, you know what? Everybody just chill out. Let's get these guys out of here. Let's cooperate. Let's move them out of the country. And when that happens, we can then take over and not have to deal with any of this. But no. We have to have them blowing up things, getting, making sure to get their last licks in on this deal. COVID, question mark. This seems to be a peak in certain areas around the country. Clearly in Florida, where I am, has been an absolute disaster in terms of the new cases, hospitalizations, and deaths. So that's something that's kind of weighing on people right now. We'll see how that plays out. And China regulations, some new regulations overnight about data and how data is used, the algorithms that are put in front of people. They want to cut back the ability for these algorithms to help bring in eyeballs to eventually push people into buying things, which isn't that the whole point of the algo? The algo is all about, trying to figure out what you like and what you don't like, and then trying to persuade you by pushing right in front of your nose something that you've been thinking about magically somehow. So they're trying to do something about that. Market direction, the KRI indicator and the Spearman. So let's start with that. I think it's interesting. KRI right now, market in equilibrium. We saw it really dip down here in the end of last week with that big dip. And then, of course, this big V, which we've seen how many times the V? Very shallow, very, very shallow oversold levels. I mean, it's interesting, right? I mean, we're not seeing anything really major. We're seeing some overbought levels that seem to keep on getting hot. And that is really this whole line that you're looking at here. And I think when you're also looking at this, when we look at the trend line here, the trend line on this is pretty amazing. When you just consider the fact that you have this general channel right here, right, that just keeps on going up and up. We're following, getting to the down part of the channel, which you could say is about 440, 439 right now on the, this is the SPY. And the upper side of it is probably 450. So a 10-point range within that channel is only 2 or 3% over, probably 2.5% overall range. But interesting that we're really not playing outside of that. So when you look at the KRI, I have to say that I find that, when you look at this side over here, we look right here, currently equilibrium, that's a big issue, means that the shorter term trend should continue. And what's that shorter term trend? Higher. So that's where we are with that. Now, when we look at the McClellan and the Spearman, these are really interesting. These are, again, overbought indicators, oversold indicators that are a little bit different than each other. They are statistically, one uses advanced decline, one uses a different statistic. But basically, the McClellan showed a pretty oversold situation here at about 213. I think intraday it was down about 250, right about here. That's usually a buy signal. You see the dip down. I mean, look at this one right here. When you get into negative 280, usually a buy signal. These tops, not as much of a sell signal. We know that there have not been really a lot of sell signals. It's not like you hear a lot of, hey, sell the rips, buy the dips. It's all buy the dip, buy the dip, buy the dip. That's all that's been going on. The mantra that's been for a while. A lot of cash out there, a lot of stimulus. Then we have the Spearman to the right here. This is both the S&P, just showing a different way on the top. Spearman kind of rolled over here. You always want to look at when it gets over the 90 range here, right? Over about 90 or so. This was topping out about 98. You don't see that very often. Oftentimes when you do see that and you see a roll starting, you have to recognize that it is, in fact, looking at, you're going to see a continuation of the downtrend. Now, Again, these have been relatively shallow, and you don't see like you see on the tops. On the tops, I'm going to draw this for you. I think it's going to be interesting to look at. On the tops, you have kind of like a long period of all these levels, right? They kind of go for a few days. On the bottoms, it's quick. V here, V here, V here. So again, just confirmation if you need it that the bias is on the buy side, which I don't think anybody needs that particular lesson. Valuations for what it's worth, pricing to perfection right now, as we talked about with earnings. Schiller Cape, the highest since 1999 or so. That is the 10-year average PE ratio of the S&P 500, the highest since 1999. Expectations are very lofty. And really, I think markets are priced to perfection. I am telling you there will be some volatility around the 10 or so announcements and speech and discussion by, I don't know if he puts out an advanced copy of that. If it does, it's probably going to come out probably 9:45. But there is going to be some volatility around till people get their hands around what the Fed is talking about. If, in fact, he does anything. My thought is that he will kind of play both sides, as he always does. And that whole idea is, hey, you know what? We are going to think about tapering, but we're still not there. Pandemic variant, next question. Hey, fines for unvaccinated. I think the vaccine companies, the Pfizer's, BioNTech, Moderna, to a lesser degree, Johnson & Johnson, AstraZeneca, those to a much lesser degree, and the testing. Those companies and test sites are in play still. We're at the month end, by the way. We're going to see some probably tape painting on Monday as we get into Tuesday's month end. Economics, existing home sales, GDP, durable goods, PCE prices all in line. Today was a little bit hot on the PCE prices, but within expectations. That is the Fed's preferred inflation number coming in at 3.6% year over year, the hottest since I think it was 1990 or something. Next week, we have home price is the index, the ISM manufacturing. We have claims, of course, and it is the first Friday of the month, starting in September already. Yes, September. Labor Day is happening next week. And we're going to see the employment report. So there you go. I put into the chat the 4-hour online coaching program that's available. You really should take advantage of that because it's free. It's $199 value, 4 hours that you can play over and over and over again if you want. It's an evergreen, meaning it's timeless. And in there, we talk about a lot of things. Now, one of the things you can do is get it for free. You can pay for it if you want. If you want to pay for it, send us an email, support@TriggerCharts.com. If you don't want to pay for it, all you have to do is tell us that you subscribed and you're a paying subscriber to the TriggerCharts Commander Series suite of indicators, and we will send you the links, and you can get it for free. So you pay $149, you get for that for the month. You get a $199 value. You just made $50 somehow. There you go. So it's in the chat. So check the chat. All right, let's get over to the stocks we're going to watch today. And please do me a favor, put in a few names that you have in there. We have a couple I saw come up. Somebody asked me about Oscar. Really? Wow. Let's see. OSCR, and that is not the Wiener Company. OSCR, right? Is it OSCR? Yeah. Oscar Health. Yeah, look at this daily. It's abysmal. Just abysmal. I don't know if you asked about this before. The only thing that I could say about this, and let's take a look at something. Let's kind of zero in. Well, let's go back. Let's do weekly first. I kind of think this could be interesting to look at. Weekly, nothing going on. Relatively new issue here. Daily. Here's what I like about daily. I don't like this. Let me just say that. Here's what you could like if you're looking for something to like. Something maybe. It's in a consolidation. It can't get over its level. 1406 top end recently. You got to look at these levels when you just hover over it. You got to look at 1382. Could not get past that level right there. Can't get below, it seems, 1251 either. Now, you are starting to see a divergence in the momentum indicator that's good if you can get and put an alert on, I would say, about $14. $14. I would put an alert on 14. If you get a breakthrough 14, the potential is that you finally will get a breakout after a really nice consolidation. Again, one of these things that you do, very easy, draw in your consolidation. If you get above that, I do think you have an opportunity to kind of move this up, and the potential next level is 1664. $2 on 14, not bad, 13% return very quickly that will probably come. Got to get through this level 15s or so, but still, 14 to 15 and change, not bad. this momentum indicator, the aileron that is available in the very popular, by the way, very, very popular also. Commander Series, the number one popular overall of our indicators, and actually has the highest rating of all indicators in the trading app store. So thank you very much for that. Aileron also very popular. The aileron is showing us that, we're starting to see a little bit of momentum move. It's not there yet. Trading 1397 pre-market. So I don't know how many shares are traded yet, but again, I just wait for that confirmation to come. You'll see a alert that will turn yellow right above what did we say, 1382. So you're going to see that alert turn yellow when the market opens here. KWeb, I talked about that last week, and I talked about this thing, and I said, this is not the usual thing that we want to look at. However, I said, look, we saw a little bit of a divergence happening. We saw this horrible negative sentiment that went on. I said 44.41, starting to look interesting. And you know what? We got to 48. That was a nice 10% move overall. That's where we are today. You got as high as $50, actually. Now, you did see that miraculously, no tricks up my sleeve, no question about this. Look, we got right to the resistance level right there. See that right here? Right there. We got to resistance and kind of banged off a little bit. Going to trade down ever so slightly on the pre-market if things hold right now. The opportunity, though, for a short squeeze, we're starting to see a lot of players thinking about getting back into that, saying that, it's oversold significantly. We saw the momentum turn positive here. Let's keep that momentum positive and then start inching up. Again, if you get above that $50 and change level, I think you have an opportunity to see this move from a severely overbought contrarian viewpoint. FUV, I think we talked about this, kind of holding up at this range. Arcimoto, oversold dramatically is what I talked about. I said if we can get a bounce up here, we may have an opportunity. ANF, big drop off yesterday, but did hold above its level, the 35 and change. I mean, it came all the way down to 33 or so. Starting to see this turn. Starting to see really bad overall momentum, but it's very sloppy action. You see how you see a lot of our our horizontal bars that are all in line here. And if in fact we put this, when I see that like a mess over the top, I want to see nothing to the left. There's a lot of overhead resistance that's going on here. There's a lot of opportunity for it to get jammed up in all sorts of areas and not break out. I'm going to leave this up, even though it's a little bit right now, just for a moment. Let's find something, for example, that doesn't have a lot to the left. And here, I guess we found it right here. This was not planned, but here we go. What you have is when you look left, again, I've talked about this 100 times, and I want you to really repeat after me. Here we go. Look left, look left, look left. And what I find when I look left is, kind of right above this level here, about 255. Really not a lot of resistance. A lot of what I would call blank space. Look at all this blank space going back. All this blank space. When you see that black, that's why I like to use this black background. When you see the black and nothing there, nothing obstructing the potential move, what happens is you get these rip-roaring moves to the upside. Now, they came out with earnings yesterday and obviously took it up even higher, right? We saw that gap up right here. But what I'm saying is that really there was no resistance above this level right there. And even if we take off the radar and we look at this, we could see two things. First, we could see that, number one, that we had this level right there, right? 247, 250. Once you got above that level and you got another yellow bar that turned green, that was the, hey, wake up. The bias is long here. You saw a great momentum. This is actually, I call momentum. It's actually a combination of an oscillating and trending. I call it momentum, but it's a combination of an oscillating and trending indicators. A lot of them in here and scored in an algorithm that we developed to give us kind of where we are from a strength standpoint of the rally. And clearly you can see that, hey, just by looking at it, all you have to do, if you don't know anything else, just look at this and say, oh, it's above zero. Oh, it's below zero. It's really hot. It's been there for a while. I mean, these beautiful green grass, call this beautiful grass, call this kind of weeds. When we have this beautiful grass here, getting a little hot, yes, I'll give you that. But that with the combination of it moving above the resistance line, very powerful. Piton trading at 108 today. It's going to drop down all the way down to, where is it going to be? Let's see, right? 105. So not too far away from its support line, which is good. Overnight, it dropped to about 98, I believe, on some questionable earnings and outlook that is a real concern. The other thing is that there's an announcement this morning of an investigation over their reporting of the treadmill injuries and how they went about that. The fact of the matter is, though, that they just dropped their price also on their lower-end Peloton bike, down $400. That was all news out last night and today. Here's what you have to look at, though. If this thing can hold with all that bad news, the 108, 109 level, give or take, really strong, even though it's down only 4% today. If it can hold that and then start to really build on the fact that they got a lot of that behind them, they took all of their losses due to the treadmill, the litigation, the issues about not selling it, the shutdown of the treadmill, the rebuild, and all that. If they can get beyond that, where can they go from there? Something to watch and something to consider. Keep your eye on that. Where's that level? Well, to be honest, about 121 is a kind of first line of support, 117 and 121. If you want to play it from the gut, if you will, you play it on the dip, okay? Really, if you have to get above 124 to really get some juice going. Dollar Tree fell out of bed. This is kind of interesting because I want to show you this on a weekly basis and what's going on some of this stuff, just to kind of get a little bit of view. This is back down. Reaction low of this was 61, currently trading at 92. But I want you to look at this. On a weekly basis, there is plenty of support here at about 92 and change, where it got to about 92, 93. Again, draw a simple line across. Just draw a horizontal line right about there, and you're connecting a lot of different levels across within a couple of cents. Doesn't have to be exact, but close, really close. And you're starting to see that's where your kind of support was. I'll kind of actually take down a little bit. There we go. 92.34 is where I would say the support was. And the low yesterday, 93.41. So close enough on that. 92.26 is where we are in the pre-market. So you're kind of right at that line right now. Any kind of further move on the downside could be a problem because you have some air underneath this. This is not looking pretty either. But this, what I want to show you that was that, I also want to show you JWN. Let me spell it right. There we go. Nordstrom's is weekly. Looks much worse on a daily chart. I mean, just dripping down. You look at this and you say, well, where are we? Well, there's nothing really below that 31.75 or so. There was a little bit of a nub there. Clearly below that. You see that we are in a major selling situation here for retail. Topped out miraculously at 46, 50% of where it was. Versus this kind of crazy stock. This is insanity. Dillard's, if you look at Dillard's, it's amazing to look at this stock. Reaction low back in 2020, about 27, held on there. 210. It's almost a 10 bagger. Gotta love that. Astra, we kind of looked at this one. Let's look at this daily. This is the opportunity to own some satellite company that actually launches satellite for low orbit and for others. They're doing some testing right now. What's the number? 1180 is our resistance. You get above that. Tried a couple of different times the last few days. Currently trading 1157 in the pre-market. I think that's all the time we have for today. I want to thank you for joining me. Have a great weekend, and I'm going to see you again next week. Make sure to go to TriggerCharts.com. Make sure to get your subscription, and of course, make sure to give us a rating over on TradeStation. Thanks so much. I'll see you again next week.